I just came off telling you how you should pretty much go about entering the trade. How do you go about entering the trade? So I'm going to be telling you about how to get out of the trade now. How do you know when you should get out of the trade? Now, this is very simple. Remember I told you, you have to wait for the counter trend line to be taken out, the lid. Once the lid is taken out, then you know it's time to get into the trade. Do not get into the trade at the Fibonacci level, at the conference level. That's not the way. You need to wait for the lid to be taken out. It's known as a counter trend line. Okay, so for instance, let's say we buy here. We just bought this market somewhere about here. Okay, but how do we know where to get out of this trade? How do we know where to get out of this market? Okay, very simple. Now, there are two ways to know. First of all, I always come to the top right about here. Okay, don't forget, this is A, B, C, D is supposed to complete somewhere around here, but this is also the 100% retracement. This is where this market stopped before we started pulling all the way back down. What does that tell you about this level? Excuse me about this. I need to take this out. It's counter trend line. It's pissing me off. Sorry about that. Good. What does that tell you about this level? Okay. As you can see, this was one, two, three big ass bullish candles. We come into this level. Next thing, we'll start to see red candles. You see, 1, 2, 3 bullish engulfing candles. We get here, and then what happens? The market starts to turn around. 1, 2, 3, couple more bearish candles all the way to the downside. So what does that tell me about this level? This tells me that this level is really strong. Okay, so as much as we're in a bullish trend and this pull back into all my nice levels, everything is looking really nice and dandy and looking really good. I've bought here. Once the market comes back into this level again, I need to be very careful because there's still sell orders here for sure. This is a resistance level, whether you like it or not. So what I will typically do is I will buy here and then I'll take out 50% of my trade at this level. 50% of my trade at this level. So I'm just going to write that real quickly. So 50% of my trade is taken out at the 100% retracement rate. For that RET rate. So I'm going to put this down here, okay, so that you can see, make it bold and nice, okay. So 50% of my trade is taken out at the 100% retracement. So if we buy here, 100% retracement is here. Don't forget, this is from here to here. Okay, so I'm gonna take out my trade at this top place here. 50% of my trade comes out here. Good. Now the remaining 50%, now in the event that we do break here, the next part of my trade is gonna be taken out. This is where I'm gonna use my Fibonacci. So good. Now let me take this here. So once I've broken here, the next level target for me to take my trade out is at the minus 0.27 extension. So I'm going to write that down for you guys to see. Okay. So the other 50% is taken out at the minus 0.27 fib extension. Fib extension. Okay. Good. Good. So that's it. Now you're probably asking me why this level, and you're probably wondering how do you put this level on. I'm gonna tell you that in a bit. Now the reason why this level is very significant is because there's something about Fibonacci that calculates something like this: A, B, C, D. Leg A to B is equals to leg C to D. So if we push up from A to B and we pull back into 50 fib and we really want to head higher, we should be able to replicate here. This move should be replicated here. So I'll just show you. Okay. Now I'm going to just go ahead and clone this and let's see if what I'm saying is real or trash. Well, just overshot it slightly. Well, you get the gist. But my point is, well, it did overshoot it, and as you can see, the market continued heading higher. But that's the idea according to Fibonacci. That's what he says. But it really does work, guys. Trust me. So I take out my first 50% here because this is very important, and then I take out my next level here. So A, B, C, D. That's what it is. Okay, 50% here, the remaining 50% here. Now, I'll tell you why it's important to take out your 50% here, because sometimes you might never get here. Okay, good. Let me drag this here. A typical, very good example is this. Okay, so, looking really nice. I've drawn everything, support, trend line, fibs. I've even taken a nice, really nice entry on the breakout of the counter trend line. I've waited for the lid to be broken. Bam. And then I'm getting very careless, because when the market gets all the way here, like I told you, at the 100% extension retracement, I'm like, nah, it's gonna head higher. I can see the next level. I'm telling you, this is what is literally what's going on in my mind when this market was somewhere about here. I'm like, we're gonna take it out. And you know what happens? Next thing I see this red candle, I'm like, yo, hold up. I look left, and I'm like, okay, that's the 100% retracement. Where are those rules I brought out? So good. Nope, not this one. This is the other guy. This is the guy I'm talking about. Bring you down. Good. 50% of my trade is taken at the 100% retracement, as you can see here. So I take out 50% of my trade here. And look what happens after I take out 50% of my trade. The market starts to belt all the way back to the downside. It belts all the way back to the downside and literally comes out to take out my stop loss. Now, ladies and gentlemen, I think I forgot to tell you guys where to put your stop losses. Something called a stop loss. Now, your stop loss is supposed to come beneath here. Okay? Stop loss basically is an order you set in the market. Don't worry, it's not that difficult to set. Once you click your buy, I'll show you on the MT for when we get there. But basically, when you click your buy, you drag your stop losses down here and you drag your take profits all the way up here. So just in case the market goes against you, once the market gets here, the broker automatically takes you out for a stop loss. So your stop loss can be anywhere between 1 to 3%. So if you're trading a $10,000 account, you're literally only risking $300. This is basically just to cover your ass. Good. So yeah, 50% of my trade is taken out of the 100. Good. So I take out 50% here, and then I move this stop loss all the way up to 15 pips plus my entry. So at this point, I'm totally risk-free. And then what happens, the market literally starts rolling all the way back down, and then it takes out my stop loss for 15 pips plus. So I've taken out 50% of this trade and plus another 15 pips-ish. So ladies and gentlemen, this is why it's important to pay attention to the 100% retracement, which is about here. Very, very, very vital. Very vital. I hope I've been able to explain to you guys why it is very important. Although obviously there are certain times where it just breaks it through 127 extension, we pull back, break it through 127 extension. However, it is very important to always take out 50%. These are my rules, and this is what has worked for me. And I'm pretty sure you're on this course to learn from me. So for the fact that you're on this course to learn from me, I strongly advise that you take out 50% of your trade at the 100% retracement. The remaining, let it slide and take it out at the 0.27 Fibonacci extension. Now, good. Let me clean out my chart. It's looking really, really, really annoying. So I just remove. Remove. Good. Getting there. Just want to take all this stuff so that you guys can understand what I'm trying to say. Now, in terms of the Fibonacci, yeah, so very good. Draw my fib from swing low. Don't forget this, guys. Don't get carried away. Always look for just try and draw this line about here. Try and envision where the move is going to start from. Okay. For those of you who are probably struggling with Fibonacci, don't come and start drawing. Just try. Just imagine that this is the leg. This is the leg. For instance, now I know this. It looks choppy, but actually this is the leg. This is the leg. This is the leg. Okay. Delete that now. Good. So Fibonacci, draw from swing low to swing high. As you can see, I was expecting this market pull back, entry, push all the way to here. That didn't happen. 100% extension, collapse. Good. Now, for those of you asking how do I put this 0.27? I'm just going to quickly right click here, come to settings so that you can see, because by default, this level doesn't come, it doesn't come. So this is exactly how my Fibonacci settings looks like. So I'm going to take a screenshot of this. I'm going to add this to the manual. Now, I don't have the time to start going over this. So basically, just come and untick this levels. You only need one, this, that, and basically there's going to be another thing here, another variable here. So you just need to change this to minus 0.27. Sorry, 7, and that's it. And then bam, you have your minus 0.27. Ensure you put all the colors I use. Is very important. I'm also going to be going over my my theme, my color scheme. I think there's a chapter before this. Yeah, there's a chapter before this that talks about color scheme, Fibonacci, how you can basically get your chart to be looking clean like mine. I think my chart is pretty clean actually. How you can get your chart to be looking pretty clean like mine. Good. A lot of people, they have so many indicators. Nah, that's bullshit. I just have just enough. All right, guys. So thank you for listening to this chapter of the course. I hope I've been able to explain to you how to get into a trade, rather when to get into a trade and when to get out. 100% retracement, 50% of your trade. 127 extension is for the remaining 50% of your trade. Very important. Why? Because we can turn around at the 100% retracement. All right, guys. Thank you very much for tuning into this chapter of the course. I'll catch you guys on the next chapter. Goodbye and God bless.